All right, let's start. So, let's get some terminologies. I gave you two sheets separate. One has a diagram just to help you understand some of the terminologies that could be a bit confusing. And then I'll try to do an example to kind of give you an idea of what a simple idea tax, how it generally gets calculated. And this table here, it's a very simplified version. There's a more updated version on one of the pages I'll show you later, which involves percentages. But at this point, we're making it a bit more simple. Here's the sort of general idea for you to understand some key words. Taxable income. When you see the word taxable income, this is the income that they will calculate this table on. Okay, so you see this table here? Boys, thanks. Let's not chat while I'm speaking during this point. Unless you already know this stuff, then I'll just need you to keep quiet. So when it comes to tax, they break it up. It's not like, let's say you earn $135,000 that you get 30% of $135,000 that goes to tax. What they do is they do it in streams. So out of your $135,000, $0 to $18,200, that's free. That's tax free. So they don't take that money. That is your money. Whoops. Let me go back to that. So based on this table, thanks. Can we just hold on to that right after this discussion? That first straight label, 0 to 18,200 of your money does not get taxed. The next bracket from $1 extra from $18,200 to $45,000. This is a very simplified table, but this is a way for you to sort of calculate. But they'll say 19 cents for every dollar over that. So if you earn $2 over 18,201, then it'll take 19 cents times 2. Okay? So if
it is just like a set amount.
Yes. Well, this one guarantees that they get a certain amount of tax per bracket. Whereas if they just did 30% of 135, they won't get as much as they would from this one. Yes, it'll be less complicated, but that's the system, how we work, and I think that's how most generally tax systems work from what I understand. So you can see the difference between the two. 2025 and 2026, it'll be 16% of the amount that you're missing from 18,000 to 45,000. But because I earn, say, 135,000, I already fulfill this point. So essentially it'll do 16% of the difference between 18,000 to 45,000. So just in case you got confused with what I just said there, I'm going to write it on paper. You don't have to write this bit, it's just to help you understand. I'm going to call it 135,000. Okay? So my first 18,200 is free. They don't tax that. But they will tax the next bit. But because I earn 135,000, I clearly make more than 45,000. So what is the amount between 18,201 to 45,000? So here we go. I'm going to use the calculator to show you. So calculator. So 45,000 minus 18,201. The difference between it is $26,799. So from here to here, that's the amount they'll tax. From that tax, what are they taking away from? They are taking, if you're looking at this table, it's 16% of that amount. If it's this table, they'll do 19 cents times that amount. So let's say I took the first table, it'll be 19 cents, 0.19, times 26,799. That's part of the tax that I'm going to be paying. But because I earn 135,000, they're going to move on to the next part. 135,000 is still more than 120. So that means from $45,001 to $120,000, how much is that? Are they going to tax? So here, we can do the same thing again. So I'm just going to write the amount to remember. So it's 5091.81. Next one was, if I earned more than 100, up to 120,000, take away $45,001. That's now $74,999, right? So 74. So this amount, because I already earned more than 120,000, I earn 135,000. I pay the full amount of that section. So the full amount is this $74,999. I pay 32.5 cents for every dollar over. So I've got $74,999 I got to times it by 32.5 cents plus the 5,092. Does that make sense? So here, I need to times this by 32.5 cents, $74,999, because every dollar I pay 32.5 cents in tax. So if I earned 74,999 up to 120, so I've got 135, then that means I got to times the full amount plus 5,092. So here we go, plus 5,092 bucks. Okay, so let's work that out. So 32.5 cents times $74,999. Oh yeah, this is cents. So you got to divide it by 100. I probably forgot to divide the other one by 100 too, actually, because that was 19 cents before. So that's 24,374.6768. This one should have been $50 then. So $50, say 92. Okay, so for the first bracket, because I earned more than 45,000, I paid $50.92. Next bracket, I'm paying $24,374 plus the $5,992. So what does that equate to? Plus 5,092. That's 29,466. 29,466.68. Okay, so free for the first one. I earned more than 45,000, so I paid the full amount, and that worked out to be $50.92. Then I went to the next bracket. I still earned more than 120,000, so I paid the full amount for that, and it turned out it was $29,466.68. And then now I'm in the next bracket. So between $120,001 to $180,000, I'm in that bracket. But how much different? You see, so you take 135,000, take away this amount, because you don't earn 180,000. You earn, your max is 135. So 135 take away 120,001. So here we go. So 135,000 take away $120,001. That's how much extra you got in this bracket. So in this bracket, you currently have $14,999 extra. And they say here, your tax on it is $29,467 plus 37 cents for every dollar over. This is how much I have over. So therefore, I got to times it by 32.5 cents. Remember, you got to divide it by 100 at the end because this is in cents. So here we go. 14,999, 32.5 cents. Divide that by 100. So now I got, that's an extra 4,874.68 cents. But they also said plus 29,467. So that's the amount of dollars I went over 120,000. This is the amount plus this extra. Yeah.
Is it not 37? It says 37 cents.
Oh, whoops. Where did I read that? Oh, I read the wrong one. Oh, I have to do it again. Thank you. Yes, it is 37. It was 37 cents, not 32.5. So 37 cents. That's even more now. So 14,999 times 37 cents divided by 100 to make it in dollars. So it's $5,549.63 plus 29,467, which works out to be what? Plus 29467. So that's 35,016.63. So now how much tax do you pay? You add all these up together. So you got free $50.92 plus, what was my handwriting there? That was 2,948 plus this. So we did an estimate. That's probably close to, let's just call that $3,000. That's about $38,000. You're paying approximately 38K. Okay? That's the general idea. So, that's what they mean when they say taxable income. Now that looks like a huge amount, isn't it? Because if you took 135K, that's your annual salary. But think about it, take away 38K, you only got about 90 something K. That's a huge chunk of your amount, true? So one of the key things that you guys want to do, tax deductions. So when you say to me, I don't know how to do my taxes, this is the tax bit. But you don't have to do that because the government does that for you. As soon as you get your pay, they do this calculation for you. So you don't need to. So when people say, I don't know how to do my taxes, I'm like, well, this is how you technically do it. But do you want to know how to do that? I'm pretty sure that most people don't know how to do it and they don't want to know how to do it. This is what you guys don't care about. What you guys should care about is that. But even I myself don't know the full thing because unless you're studying tax law, then you'll know exactly what you can remind us. So remember, your taxable income was 135,000. But the smaller that amount, so the smaller the bracket, the better for you. So how do you reduce the bracket? This is how much you get. So if you earn a lot of money, so if you got investments, shares, you got one income coming from your main full-time job, and then you got a part-time hustle job, that's your assessable income. All incomes come here. But what you want to do is this. This is the only thing you can do. This is the thing that you want to do, which is to minus as much as you can. Some people do fraud. So some people lie about the tax deductions. And if they get caught, from what I understood, nothing much happens. You just got to pay what you owe. Okay, so this goes to the government and the government uses the money. Does that make general sense? So do you need to know this in real life? Not really. For your exam, that can come up. So you just need to know how to work through the brackets and how that works. That's mainly for year 12s. Year 11s, you guys just need to understand the general gist of tax. Yeah? So, tax deductions, this is going back to what Pav was asking before. If I learnt what I learnt in foundation, do I need to hire a tax accountant? Yes, if you have lots of income. If you have lots of multiple income from different streams, it gets complicated. Especially if you have dividends and shares and investment properties, there's a lot of tax deduction rules that I wouldn't know and the textbook wouldn't say. That's where your tax lawyers know. But if you are like me with only one income, which I just work as a full-time teacher, it's pretty easy. You get your salary income, you've got your assessable income, and I just deduct what I think I'm using. So if I pay someone to do that, it's pretty redundant because I know what I'm paying in terms of work-related expenses. So I don't really need one. But if you have multiple income streams, then yes, income tax law is the one, how if you really want to know how to do your taxes, that's it. So for the general population, you're probably generally like me, have one income stream. And so you can do your taxes pretty straightforward. If you want to research, you can search online and learn how to deduct better. That's about it. The more you know about law, then the better. But not everyone is a tax law expert. Yeah? Does that make sense? Okay, so a couple of terminologies for you. So tax deduction is the main thing for you to take away. When they apply the tax, it gets confusing, but they call it income tax. Okay, so if they say income tax, that's the tax they've applied. This is the income tax. Income tax. Okay, so these brackets are called income tax. Together, your taxable income includes your tax deductions. Yeah? Give a more broader perspective. On this page, I tried to summarize it for you as a very simplified idea. Government, broken up into states and federal. Government is meant to help us provide services like, public schooling, roadworks, healthcare system. They need money. So where do they get the money from? From a government state and from a state point of view, it's what you do. You guys as citizens contribute a certain amount, right? So you can have 3 different people with different jobs, or you could be that person earning all these 3 income streams. That's your income overall. Tax withheld is what you pay to the government so that they can provide those services. Okay, so everyone has to pay tax regardless, unless you're earning a very small amount that they don't tax you, right? This is called a payee. When you have a full-time job or just a job in general, you probably have seen payee. Payee stands for pay as you go. What does that mean? You pay your taxes as you go. So every fortnight or every week that you get your income from the payer, your employer, part of that money has already been taxed. So they've already taken part of that tax each fortnight. So that's why it's called pay as you go. What's the problem? Each fortnight that they pay tax for you, they do an estimated one. They don't take in account of any tax deductions. So say you had $1,000 and they estimated a third of it. So let's say they took $300 away. So if each fortnight you lose $300, then 300 times 52, let's see what that works out. 300 times 52, let's say you lose $15,600 in tax. Okay? This is an approximate answer. This is why when it comes to tax time, they talk about tax deductions. Why tax deductions? Because you may not actually owe $15,600. You might have only owed $6,000. And whatever's left over, that's your tax return. Because you paid the government $15,000, but then when you calculate your actual tax, with all the deductions and all that you claim, so the more you can deduct legally, then there's more of a gap. More of that gap comes back to you. Okay? That's what tax return means. Now, there are a lot of different types of fees that comes into your payee. Medicare levy, for those who don't know what that means. Medicare levy, everyone has to pay. You will pay 2% of your taxable income in what they call Medicare levy, and that's just to keep the Medicare system, so health system. So if you've ever been to the doctors and your parents have a Medicare card, to swipe that card, that's the contribution that we all taxpayers contribute to keep that system going. Okay? So it's 2% of your taxable income. So whatever you actually get over here, 2% of that goes to Medicare levy. Okay, regardless. There is an incentive stream in your textbook. They talk about MLS. Anyone know what that stands for? Because it follows with this idea. So Medicare is to keep the Medicare system going. Everyone has to pay 2% regardless. Anyone know what MLS is? No? This is Medicare levy surcharge. So they've introduced this in the later years. If by the time you're 31, so age 31, if you do not have a hospital cover or insurance, they'll charge extra, okay, from your income. What they're trying to incentivize is that you have some insurance payment so that when something does happen to you after the age of 31, which seems to be when it likely happens, so from 31 onwards, if you don't have health insurance, they will penalize you because you likely use tax money for your hospital fees. Okay, so that's why they encourage all young people, when you start earning money, start looking into a hospital cover so that you avoid MLS. That's one of the reasons why. Okay, so MLS is a certain extra charge. You already pay 2% for healthcare system, but if you don't have a health cover for yourself, they will charge you as part of your tax. They will charge extra on MLS. Okay? All right, team. I want to stop there in terms of the key words for you to understand. Can I get a show of hands? Shh. Listening? Thanks. Finita? Thanks. Just hold on for a second. Can I get a show of hands? We understand taxable income. Hands up if you understand what taxable income is. Okay, so I'll summarize it again. Taxable income is your total income minus the deductions. The more deductions you have, the less that number is, less tax. That's called taxable income. Yeah? Income tax, if you see that word, that just means these brackets. Cool? All right. And then if you see the questions in your textbook or exams, if they use payee just means your salary has some tax been given to government. Hands up if you understood that bit. Payee is just tax from your salary each year, annually, gone to the government. Is it true? Is it the real amount? No. The real amount is after you do tax returns, That's how you know how much you actually owe. Okay, and the calculator stuff, they do that for you already. Cool? Those are the main things you needed to understand. All right? All right, team. Let's go back to the main page now. First page. Here we go. Let's start from here. So I had to give you a bit of a background so that at least you have an idea of what you're focusing on. So when you read the question, it makes a lot more sense what you're trying to do. So we now know when you go apply for a job, you look at your net salary. That's called your net pay. Your gross pay, there's always tax involved. This is where your pay G comes from. Okay? Let's have a look now. I'm using this table just to make things a bit easier for you rather than doing percentages. So we're going to use this table to calculate tax. Here's an example. So do this example with me so that you get a sense of how to do it if you were to do it by hand. Real life, you do not need to do this table in real life. The calculators will do it for you and your apps, the ATO will do it for you. Okay, you don't need to do it. But as part of the foundation exam, you can get a table like this and you need to know how to interpret it. Okay, here we go. Gerard's gross annual salary as a vet assistant is $49,500. Okay, so this is how much this person earns in a year. Right? Shh. Listening, voice. Can we just hold it for a second? Thanks. So, Gerard's net pay, if you think about it, earns $49,500. That's the gross payment, right? But there is tax that goes. How much tax does Gerard pay to the government already? Just looking at the question. How much tax? $7,000. That's the employer doing that for you. Okay, so each fortnight that they give you a payment, they would have paid as they went. So therefore, in total, $7,000 has already gone away in tax. It's called tax withheld. Why is it called withheld? Because they kind of give you, they take the money away, but they'll readjust it at tax time. That's why you do your tax returns. Yeah? So tax withheld, they've taken away $7,000 of yours. The question is, how much do you truly owe based on after the deductions? Whatever's left over. So let's say you only owe $6,000, then you get $1,000 back as tax return. Okay? If you obviously owe more, $8,000, then you got to pay $1,000 extra to the government to make it fair. Okay? So $7,000 is an estimated tax. Now, so we've got a view. We've got, okay, he earns $49,500. He's already paid $7,000 in tax by his employer. But we also see that he also earns $560.40 in interest. So let's say he does an investment. He earns $560.40 on a side as well. Okay? And he knows that his tax deductions total $2,345. Okay, so this is what I mean, that if you did your own calculations, you can work out, you can push that amount a bit up, a bit below. Obviously, some of which you do might be illegal, but that's why a tax lawyer would know where they can maximize your tax deductions. That's the best thing you can do as to maximize your returns. Yeah. So we know that tax deduction. So remember, taxable income. Taxable income. So in order for them to calculate how much tax you truly owe, they need to see, well, how much money do you get in first? Assessable income. So this is on the second page I gave to you. How much do you actually earn? So he earned $49,500 as his day job or main job, but he also earned in interest $560.40. When you minus the deductions, so tax deductions, obviously this is the best part that you can do. The more you can tax deduct legally, the smaller your taxable income is, the less tax you pay. Does that make sense? So tax deduction, in this question, they've already told you that you've got a total of $2,345 that you can deduct. So when they ask you, A, calculate Gerard's taxable income, it is not $49,500. It is not 560.4. It's not together. It's this whole thing. Okay, so taxable income is how much they earn minus what they can deduct legally, hypothetically. Yeah? Because I do know people accidentally do it illegally. Sometimes it's such small change that the government probably won't chase up on it. When you claim tax deductions or tax return that is really absurd, then they may ask to audit you. Okay, and then you have to have your track record and all that. But here we go. So part A, how do you answer the question? Taxable income. So taxable income. We know he earns $49,500 plus $560.40. That's how much he earns in total. So had he not even claimed any tax deductions, that's how much they're going to work off. Based on that amount, that's what they're going to tax using the bracket system. Yeah? But since he's already calculated his tax deductions, we're going to minus $2,345 from there. Let's work out the total amount. So taxable income, I'm going to use my calculator. Here we go, $49,500 plus $560.40 gives you $50,060. So $50,060.40. That's how much he earned in total. But we're going to minus the tax deduction. So this is the best he can do so far in reducing his taxable income. Because the more you can reduce that number, the better for your tax, less tax you pay. But obviously, the less tax that everyone pays, the less money the government has. So it's a bit of like, it's your moral interest versus your personal interest. Yeah? So here we go, minus 2,345. That means his taxable income is $47,715.40. Okay. So you had a total of this, but he minus what, based on his all these other things that he can deduct from legally, that's the amount that we're going to use the bracket from. Okay, we're going to use the bracket to work out his taxable income. Also income tax. All right, here we go. So B, calculate the tax payable on Gerard's taxable income. That is the hardest part. Shh. Listening? Boys? Thanks. And it says here, including Medicare levy. Now, I gave you the notes before. How much do you pay in Medicare levy? Look at the page. So everyone has to pay. This is the current amount. How much of your income do you have to pay in Medicare levy? What does it say on the page? 2%. It's 2% of your taxable income. Okay? Not on your salary, not on your investment, on your taxable income. So 2% of this amount is going to the Medicare system. That's what it is. 2% of this will go to the Medicare system. Okay? How much is calculate the tax payable? Well, to calculate tax payable, we've got to look at the income tax, each bracket. So I'm going to teach you how to go through this again. Okay, so here we go. Let's go through the table. So we know taxable income is $47,715. First bracket is from $0 to $18,001, I think it was. It's 18,200. So 18,200, this is free. This is part B, okay? So that's free. From $18,201 all the way to $45,000 to $45,000, you're paying 19 cents for every dollar over that point. Okay? So, here we go. From this point to this point, so $1 over $18,200 you're going to pay. So let's work it out. $45,000. Take away $18,200. That amount, $26,800, is how much you're going to pay because you earned an extra dollar over that, right? $26,800. You're going to be paying 19 cents for it. So here we go. $26,800 from here to here because that's how much you've got. Okay, so from $18,200, you got $26,800 extra. Times, now the table says 19 cents. Can you see that? It says 19 cents for every $1 over 18,200. So from 18,200 to 45,000, that's 26,800 bucks. We're going to times it by 19 cents. To make your life easier, I'm just going to do 0.19. Okay, because that's 19 cents. Let's work that out. 26,800 times 0.19, 5,092 bucks. Okay? But how much did you earn? This is your taxable income. That was over 45,000 by how much? So this is where we're going to work out how much is $47,715.40 over 45,000. How much extra did you have? So here we go. 47,715.4. Take away 45,000. You are $2,715.40 over. Okay? So now, let's look at the third bracket. So you've ticked off the first bracket. Free for the first bracket. Second bracket, you paid the full amount. So it's 19 cents for all of that. Now you're in the third bracket. Shh, boys. Thanks. You're paying $5,092 plus 32.5 cents for every dollar over 45,000, which we just calculated. You are over 45,000 by 2,715. So this amount, that dollar, 2715.4 times by 32.5 cents plus 5,092. So here we go. Next bracket. Next bracket is 45,000 to 120,000. You have to pay $5,092 plus 0.325. So that's 32.5 cents. 32.5 cents times by the amount that you have extra. So $2,715.40. All right, I'm going to pause here. Boys. Can I get a show of hands? Without my guidance, were you able to follow and understand up to this bit? Because that was the main bit. Without my guidance. So if I gave you the table and I just gave you this question, would you have been able to go through first band free, second bracket, worked out 19 cents for every dollar extra, and then the leftover bit after 45,000? Hands up if you felt, say, at least 7 out of 10. So 70% of it you understood what to do. Okay, good. So there might be an area we need to work on. Yeah? So that was the first bracket free. Second bracket was the full amount from 18,200 to 45,000. That's the amount. Times by 19 cents. That's how much I pay in tax. Third bracket, 45,000 to 120,000. I don't earn 120,000. This person earned only 47. So from 47 to 45, what's the difference? It was 2,715. So I subtracted them to see the difference. So that's how much I have extra over the 45,000. So here they said 32.5 cents for every dollar over. So this is how much I have over plus 5,092. That's how much extra tax you pay in that bracket. Okay, so you're in the third bracket. So being in the third bracket, let's calculate it now. 0.325 times 2,715.4, and then plus that with 5,092. So you got, this bit is 882, was it? 82.505 plus 5,092. See what that works out to be. So you now have 5,974.505 for the third bracket. Okay, so this is the first bracket's free. Second bracket, I'm paying 5,092, and now I'm in the third bracket In the third bracket, so free, 5,092. And I've got 5,974.505. So when they say in Part B, what's your taxable pay or tax payable? The tax that I'm paying is $5,092 for the second bracket plus 5,974.505 for the third bracket. Get me? Okay, so in total, tax being paid plus 5,092, that gives you $11,066. So $11,066. That's the tax payable. Okay? So this is how much tax the person needs to pay. And this hopefully ties everything together for you to understand. Part C says calculate the amount that Gerard should receive as a tax refund. Will Gerard receive a tax refund? Think about the amount of tax he paid already and how much tax he owes. No, he wouldn't be. Why? How much tax did he pay? So think about it again. How much tax did he give to the government? He gave $7,000. But when we calculated, he only deducted $2,345 from that amount. But when we calculated each bracket, how much he actually has to pay, it turned out it was 11. Oh, you know what? I just realized that number's too big. You know why? I doubled up on something. I doubled up. Oh yeah? I doubled up on this bit, didn't I? I just realized the simple table had already calculated it for you. They already calculated this section. This one was the 5,092 from that bit. So I doubled up on that one. Yeah. My bad. So it's already actually calculated that bit. So that means in terms of the brackets, you only needed to work on the third bracket because you earn 47,000. We jump right to here. You don't have to work out these ones, which is nice. That's nice. So the table's actually done it for you. I didn't realize that. Otherwise, I would have to go through each one to work it out. So it looks like they've already worked out 5,092 because you're already past 45,000. That's why you have to add that one on. So this one here actually equals 5,092. So if we work it out, sorry, my bad. That means we can take this bit away. Oh, sorry, not that bit away. We can take this bit away. Don't need to add that extra one. So this was from band number 2. Bracket number 2 you didn't need. You only needed this bit. All right, so that makes a lot more sense now. $5,974.505. Yeah, they paid $7,000 in tax. So yes, they do receive a tax refund. Tax refund of $7,000 minus 5,974.505. That means Gerard should get back $1,025,495. Sorry for confusing you there. I actually thought we had to work through each one, but I didn't realize within the table they already calculated the one previous to that. So what they've done here is that if you earned 135,000, we can actually just jump straight to this bit because that one will calculate all of that. That's what this is. So usually back then we'd have to calculate each strand. Looks like they've done it for us. So this one represents these two. This one represents this one. That's what that is. Okay, so that means we didn't have to calculate each bracket. We can just go straight to where we're at. So that makes it easier. Okay, so that's the amount, and you just have to work out 37 cents for every dollar over. That's a lot easier. Okay. I want to leave this here just for you to just have a think about. I want to pause the video and just